Welcome back, everybody. So for today, I want to give a weekly review and take a look at a couple of things. Let's go over to the calendar. All right. As we can see here, we had no news today. For Tuesday, we have PPI at 8:30. At 10 o'clock, we have Fed Chair Powell. Nothing major. On Wednesday, we have CPI. Lots of rate folders at 8:30. Thursday, we have unemployment claims at 8:30. Nothing major. And Friday, we have 10:15 FOMC member Waller speaks, which is not anything major. It just seems like we have Tuesday, Wednesday, and Thursday volatility. Looking at current market conditions, looking at the dollar index, moving up to a monthly. Not much to see on a monthly time frame. We came down, we're basically inside of this, which would be a immediate rebalance. We're inside of this gap going into a weekly. More to see. We are basically trading lower at this point, targeting these lows as well as this one and this one, because we traded up higher, rejected this daily fair value gap, which we'll take a look at in a moment. And note that we have this weekly fair value gap, and we traded the high of this. So I'm expecting price to target this low and possibly this one if we get animated. Let's get down into a daily. All right, looking at the daily, here we have that weekly fair value gap. One thing that I also took a note of was this wick, this weekly wick, consequent encroachment level. Notice that we traded into that last week, fell down lower. We have a small little fair value gap in here, which I didn't take note of. I'm looking at these bigger, more relevant fair value gaps that we have. This would be a monthly fair value gap. And then we have a weekly inversion level all the way to the left. Let's just go up and look at those. Monthly fair value gap. Weekly inversion in yellow. There you go. Those are the levels that I am looking at. They're more salient to me. All right. So we traded into this weekly fair value gap high. Notice how we traded lower and we closed below this daily fair value gap low with this candle's body on Thursday the 9th. And we traded down lower. So to me, this gives me a narrative that we are trading down lower. We retraced it back up into this up candle. If you take and extend this fair value gap, price would have tapped into that as well. And we have traded down lower today. So price is showing me that it wants to trade down lower. So I am looking for this wick. That's going to be a daily wick. I'm going to be looking for price to trade down into this wick. We also have this old low as well as this old low. And if we close where we currently are at in price, notice that we are at this weekly fair value gap low. We haven't traded through this yet. If we do close without going any lower, then we still have Tuesday the 7th of 2024. Then we still have this low left in play. Now we also would have Friday the 10th. We would have this high in place if we don't go back up there and take that out. So if we can leave this low in place and we can close without trading lower, then I would see this as a relative equal low. And then I would expect price to trade up higher tomorrow and then take out this high of the 10th and then trade down lower, taking these equal lows and possibly taking Monday the 6th and take this low, trade into this daily wick consequent encroachment, which would overlap with this daily fair value gap, which would also overlap with the weekly inversion high. So that's a nice little level of confluence that comes together and it forms one idea. The second idea that I'm looking at would be if we leave these lows in place and we stay above this weekly fair value gap low and price trades down lower, clears these lows, then we have this high in place. And price could trade up into that. That is if price fails to close below this weekly fair value gap low. The other play could be that price could take out this high, take out these equal lows, trade into this wick, consequent encroachment, weekly inversion high, and from this level, price could then trade back up higher. That's the other play. So we have a couple of plays in place. I'll have my focus on leaving this high intact, leaving an equal low, and price taking this high and possibly dropping down, clearing these lows tomorrow. That gives a nice bias. Let's go over to the NASDAQ. All right. Since we have formed a bearish bias on the dollar, I would expect NAS to trade higher. Let's look at a monthly. Not much to see other than the fact that we traded inside this fair value gap on the monthly. Looking at a weekly, we don't have much to see in this case. The only thing that would be noteworthy would be the fact that we have this tail and this wick, and take 50% of each one, and we would have a fair value gap around this area. That is for your own study. We had a breaker block. We traded through that. This little gap would be a weekly inversion. We traded into that last week, closed below it. We traded into it today, pulled back, closed below that. Moving down into a daily. Looking at a daily, we have this daily weak consequent encroachment level noted. We have its high. Notice how we traded back into this consequent encroachment of that, as well as this fair value gap. Probably take note of this. There we go. That's noted. We traded above this high, as well as this one. We still have this high resting above us, as well as this high over here. If we close lower today, welcome back. This is the following day, and we will continue the market review. We were talking about this fair value gap on the daily chart. How price almost tapped it and traded off higher into the weekly inversion level. Tap the high, leaving an equal high, pulling back inside this range. So an ideal scenario would be price pull back into this gap, then trade up higher, clearing these equal highs. Then we have all of these targets in our scopes. Let's take a look at dollar index. Dollar index did indeed leave this equal low in place, and we have swept up and cleared out this high. So the ideal scenario would now be to see a dollar index trade down lower, take out these equal lows, and continue pushing lower. So we would like to ideally see the same thing happen in ES, where ES did not take out its lows yet, and then trade up higher, taking out its equal highs. Let's move over to a NASDAQ chart, monthly. We have all these levels that I can get rid of over here. That's just me tape reading and looking at my setups. All right. So looking at the NASDAQ, we tapped into this rejection block. The tail of this candle, we tapped into that. Traded up higher. It's reaching for higher prices. Not much else to see on the monthly. Weekly, we turn it into a daily order block, which can also be seen as a weekly order block. On the weekly chart, we also have this weekly fair value gap. Price traded into that, get off of it. And then in this candle, we traded back down into this gap and we reacted higher off of that level. So we have this fair value gap on the weekly. You can extend that through. That could be a potential level price could trade back down into. But we clearly have equal highs on the weekly chart. That would be my draw on liquidity. Equal highs, dollar is trading lower. I would look for higher prices in these pairs. On the daily chart, we can see that daily order block. We can see how prices respected this order block and has traded its mean threshold a couple of times. Traded off higher. Prices traded higher. We have a daily fair value gap, which would now be a inversion. Price traded into the inversion on Wednesday, and we traded off higher into this daily inversion level above us. We can see that we have been range bound the last couple of days. Also taking note that on Friday, we did trade into this daily inversion. We moved off higher. We traded into this daily inversion. So that leaves us between two PD arrays on the NAS with prices slightly pushing higher. So leaving relative equal highs over here and leaving equal highs above us. So I see the draw in liquidity as being higher. We also have this high over here as well. So we still have equal highs in play, very close to price. So price will definitely be reaching for those equal highs. So I'm looking for buy side. As a general, let's look at the calendar. We have 8:30 PPI, 10 a.m. Fed Chair Powell, nothing major. Wednesday we have CPI, which this would be a heavier number. And I would definitely expect them to keep price inside of a consolidation profile until this CPI news release has blown over. So Wednesday would probably be a good day to take a trade. Tuesday, more likely, would not be such a good day to take a trade, just because everybody would be anticipating CPI release on Wednesday. If we just go down into a 1 minute and we just take a peek at yesterday's price action. Just go back. Here we go, Monday. You can already see this looks like high resistance liquidity runs. So what happened was overnight, we opened up and we just rallied up higher. So longs were in profit. Not much happened at 8:30. Not much happened. We just rallied. We had one more rally. Retrace 9:30 posted a reversal, and now this price action in here would be a breaker block. That's your breaker block. Look at how price traded right to the consequent encroachment, missed it by a tick. We also had a fair value gap overlaying that, as well as this tail of this candle, which also would be a overlapping factor that you could look at. So we have a couple of confluences, and then you have price trading down lower, so that gives you a market structure shift. Beautiful impulsive move down lower. So that gives you a beautiful valid breaker block trading idea with liquidity resting above these highs. And then for targets, these equal lows down here. They look nice and clean. And we also have these relative equal lows down there, which could be used for a target. That panned out very nicely. And then we also have this equal low structure, which is basically in line with this one. Panned out beautiful. And if we zoom it out even further, then we see we have this low right there. If we just go into this area, and then you can see we have this low as well as that low, which gives us an equal low. Ideally, this fair value gap would have been, I wouldn't have been looking at this. I would have been looking for this equal low as well as this one. And then this fair value gap as an ultimate terminus, which you can see we traded into that, and price was stopped in its tracks. And it referenced back to that same level later in the day, creating another equal low, and then finally pushed through early in the PM session. Really crappy price action. You wouldn't want to be sitting in any of this. Wouldn't want to be in any of that. No, nothing clear for me to take a trade off of. So I wouldn't be bothered by that. Yeah, quite messy. ICT took a trade inside of this move lower. And he was looking at not exactly sure, but I remember he was referencing this low for his first take profit. And then I believe he was referencing this down here, this equal low. Anyway, you are free to go and watch that video on his channel to see how he executed in that. And he was looking at a inversion. I believe that was this one. Extend that through, and he took an entry off of that since he didn't get his fill up in here like he wanted. We also had this breaker block. But in this case, I wouldn't take this breaker block as having an impulsive move trade through it and back to it. So that to me would not be an ideal breaker block scenario because we did not have an impulse move. But 930, that did indeed give us this breaker block pattern with a fair value gap with this beautiful wick. And we also did trade into this. Let's just go up into a higher time frame. Let's just scoot it over. Breaker block. To see what this level, we had a daily inversion. So we traded into the daily inversion level, and I could put quadrants on that level, but we just referenced that as we traded into that daily inversion level, so we could expect a reversal. Looking at this 15-minute, my eye would be drawn to this balanced price range with these two gaps overlaying one another, but we did shoot right through that. My focus would be drawn to this wick. I would pull a fib on this. Let's see if this fib's going to work with me over here. 25. Let's just correct this up here. Snap it to the level. And let's just eyeball it by pulling it through. You can see that we traded into the 25% and we did not reach the 50%, which indicates that we are very bearish. So let's just go ahead and annotate that. 25%, and we can just note that as a 15-minute wick. Perfect. So get rid of this fib. Let's just take a look at the higher time frames at the hourly as well, because I would be looking at that as well. You can see that we also have a wick. Let's see what this wick would. We can see that we basically have the same idea here with the 25% of that wick coming into play. Jump into a 4-hour. Again, we have that same wick. So across all time frames, we would have this wick, and no matter from where I would look at measuring this, I'm going to get that same 25% level as a confluence, and I would look for a retracement type of a move following that idea. So with that in mind, we now have higher time frame PD array backing us up, and keeping in mind that we traded into this daily inversion level. We took out the buy side liquidity resting above this. Time of day was 9:30 a.m. We tapped it. Look at this beautiful rundown. That can be used as an order block. Price traded back up into this order block. Fell out of bed. Traded lower. Took out this low. Break block, fair gap. Tail of this candle, 50%. Extend that through. 3 confluences. If you took this entry, let's just see over here. Short position. Let's say you took the entry right there. After the rejection has formed. In this case, I would place the stop right there at the high of this tail. And 2% would be the target. And you can see if you took your entry, you didn't have any drawdown. 1, 2, 3 minutes. Take profit was hit. You're done and dusted. Trade idea finished. Equal low. There's the equal low. That would be the draw on liquidity. Then you would have these equal lows down there. And that would be all that you need to frame a trading idea. And it's as easy as that. Now take note that this was the only really clean move of the day. Unless you were really doing very, very small time frame scalping, such as the 30-second or the 15-second time frames. You can see this was just not clean at all. I would not engage in that. So this was the trade for the day. And this brings us to a conclusion. Hopefully you have found this one insightful and you have learned something. Until I see you in the next one, good luck and stay safe.